Jim, I'm going to come over to you. I mean, stick with what's working. How do you see the second half of the year? How do you play it?
Well, look, I just, my money's where my mouth is. I'm actually trimming Alphabet today. I do, despite what I'm saying, and Steve, you got it right, that I am cautious on the economy. I am still fully invested and overweight to the cyclicals. Could be wrong, okay? I understand the folly of predicting that the Fed will, as a quarterback, lead the receiver and cut in anticipation of weakening, cut in anticipation of getting to 2%. But they have said that they are likely to cut before inflation gets to 2%. We'll see. But in the meantime, as you look at earnings estimates, you're actually seeing that for the first time in a year, outside of Mag 7, you're expected to see growth. We'll see if that happens. I'm looking at a Strategas report today that says that absent the Mag 7, there should be 12.9% year-over-year earnings growth in the other 493 stocks in the second quarter. I happen to see that in the actual anecdotal stories that I hear from companies. If you look at things like how many people are flying, if you look at how many people are visiting Las Vegas, if you look at how many cars are being sold, things like that, there is reason, plenty of reason, frankly, to be bullish on the other 493 stocks. But I say that with a healthy degree of caution that this could go awry if the Fed stays too high for too long.
All right, so I want to ask you about this trim, though. Where are you trimming it to? Were you overweight before, equal
Thank
weight?
You. Yeah, so
is it profit taking?
This was one of my biggest weights in technology. It was well overweight, so I'm actually just bringing it, Frank, down to market weight. So that is profit trimming. And there's other things in the cyclical space, in the non-Mag 7 space that I want to add to. We'll get to that later.